You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again to get back on the futures options horse. Yes, it is time for TWIFO, This Week in Futures Options. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get us. You can tune in live. If you just can't wait for the podcast to hit, you need to have it in your ear holes instantaneously. Guess what? We got you covered live every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern via the old Mixlers. Grab it once, set it and forget it. I get you all the good stuff we do live throughout the week. Not just this show, VolViews, about an hour and a half ago. Option Block a couple times a week. Maybe some of our fun little interviews and chats. Like we had Tony Saliba in the studio earlier this week. That one went out live as well. So if you grab that Mixler link, you get all sorts of fun surprises throughout the week. You never know what you're going to get. So if you like some live action over there, you can check it out. Of course, you can always check out our show reels up there as well if you don't want to wait for the on-demand version to be available. The nice polished podcast version. Just remember, those are the raw live stream recordings, so not quite the polished same entity at the end of the day. But those are up there, usually up there for about a week or two, so you can still get them after the fact. But after, of course, once the podcast's live, no reason to head up over there and get the on-demand recording. That's just for the people who really need it immediately in the old air holes. Of course, however you listen live after the fact, make sure you hit us up, questions, comments, insights, pearls of wisdom. We do indeed, easy for me to say today, indeed enjoy hearing from you guys. And joining me on the old program today, my counterpart, the yin to my futures options yang, Mr. Nick Howard, the founder of Bantix Technologies and creator of a little platform we like to use around here called QuickStrike. Mr. Nick, welcome back to TWIFO. Welcome back to the network. It's been too long. It feels like it's been 10 years since we've spoken, but it's only been a week.
Is that all it's been? It feels like they come around mighty quick these days, these weeks. So
they do. And you know, a lot has happened in the market, and a lot has happened in the world of Mr. Nick Howard. Before we kick it off, I want to send some congratulations your way. You are indeed a first husband now, or at least perhaps on the way to that, because your lovely wife, Miss Tara, is now the official Democratic nominee for the Illinois House of Representatives for the 48th District. She secured that nomination this week. Congratulations, sir. Must have been a crazy week in the Howard House.
Oh, no, we're excited. Obviously, you know, it's great stuff. It's unopposed in the Democratic primary. The big one's coming up in November. So, but we had a good showing from a vote standpoint. So I think, you know, cautious optimism as always. Just running the campaign as if you're behind. That's what you got to do all the time. So yeah, thank you for that plug. For all 18 people out there listening right now, it's good.
No, obviously all the podcast fans, if you're in the Illinois 48th district out there, I think it's Glen Ellen, that area, somewhere out there. Nick can, I'm sure, clarify it for us. Make sure you get out there and vote. The big battle coming up, of course, on election day with the incumbent Republican, I believe his name is Peter Breen, in that district. So there you go, a little bit of behind the scenes Illinois political action coming at you as we kick off the show here. And we're going to kick it off as we like to do all these times when the product is rocking and rolling. Talking Crude. Crude actually lighting up our movers and shakers over there at CME chart as well. By the way, you guys can always follow along with the charts Nick and I like to use over there at QuickStrike for yourself during the show, cmegroup.com/TWIFO. That link's live throughout the week, but a little extra live goodness during showtime when you guys get to access and click on some of the links that Nick and I can do during the show. So if you listen into the show or after the fact, just make sure you change those expiration settings back to Friday so you can see what Nick and I are looking at. But other than that, it's a great resource, great tool. You guys should be using it all the time. WTI crude oil, spoiler alert, number 2 on our big movers and shakers for the week, up nearly 5%, 4.88%. Actually, net on the week, after that, since that report was run, it has actually broken 5%, up 5.02%, or a little over 3 handles. Back up in the 65 range, 65.5 out there in WTI. So all you crude bulls who were lamenting last week's action, didn't see the follow through the rally you guys wanted, you thought it should be higher, and there was a lot of, shall we say, bearish information coming out last week and even this week. And yet, you know what? The bulls said nay to all of that. We're taking this roller coaster back up north, and doing so pretty aggressively. In fact, the EIA estimating this week U.S. crude oil production hitting a new record high of 10.4 million barrels per day. That's from the March 9th to 16th period. Obviously, bit of a lagging indicator there. We also saw production increasing year over year, nearly 14%. So you think all of that would combine for an effective 1-2 punch on crude and take it down a bit, but nope. We've got crude in rally-ho mode nonetheless. So crude bulls loving what they're seeing out there. In terms of what we're seeing out here, looking at the old TWIFO page here, on QuickStrike, you'll see that it was a fairly active week out here. Crude, WTI usually does like 3 to 4% increase in OI every week. This week up 6.5%, so it's a very active week out here in all things WTI. And about 44% of all that action coming in that May contract. That's where people were lighting it up. And number one with a bullet this week, which may surprise you because we finished the week up so strongly. I know there was a little bit of vacillation intra-week, but finishing the week up so strongly, you might think maybe some 65 calls would be number one with a bullet. And you would be wrong. It would be the 57 puts leading the charge this week, very strong, about 2x the aforementioned, or close to it, 65 calls. 57 puts doing about 30,000 contracts this week. The lion's share on Wednesday, 23, almost 24,000 going up on Wednesday alone. The rest scattered throughout the week. About 16,000 and change in terms of contracts net opening. Pretty much all that coming on that Wednesday. So a lot of opening positioning on the 57 puts back on Wednesday. That's kind of dominated our charts here for the rest of the week. Then we drop off a bit to number two, the 60 puts. That's usually where we see our action kind of topping the charts. Crude oil traders like their even number strikes, and for whatever reason, 60 puts only number two this week, 25, nearly 26,000. The lion's share actually coming today, 8,000 and change, lighting it up today, 4,000 or so on Tuesday, and almost the exact same number, about 39.50 on Thursday. Net slightly closing on the week, about 700 closing on the week. Of course, you don't have the OI changes for today's numbers, so that might change that a little bit. But so far, at least, net slightly closing on the week. Then we actually have to roll out a little bit and up. We have to roll out here to this is June, actually. The June 70 calls are where our next number three on our list actually are. So even though most of the action coming in that May contract, June had a little bit of action this week as well in terms of the June 70s, lighting it up with 21,000 contracts. The lion's share on Tuesday, about 5,800, and a bunch going up today as well, 5,100 going up today. Net about 2,300 opening on the week. So the Bulls back in action. You know, those 70s may have seemed like a bit of a forlorn hope just a week or two ago, and now all of a sudden they're back in play and doing so for size. Right behind it, of course, are the 60 puts, also out here in June with about 20,000, almost 21,000 going up out here as well. The lion's share again today, 6,800 today, 5,700 going up on Wednesday. The rest scattered throughout the week, about 3,000 net opening on the week. So we're kind of, it's interesting. I like when we jump around a little bit in the months. It's not all dominated by one month. If you're saying to yourself, what about those aforementioned kind of May 65s? Aren't those lighting it up? Yeah, they were. They came in about number 5 on our list here with about just a little bit under 18,000 going up this week. About a third going up on Wednesday, 6,300. The rest kind of broken up throughout the week. About 1,500 contracts net opening here on the old 65. So a lot of interesting back and forth action on a lot of strikes. As we like to do here, we like to scroll a little bit. Sometimes you guys can always do this as well on Quick Strike. Scroll on down through all the other strikes that are active and open. If you just set the expiration settings, this is what I like to do, listeners. You set the expiration settings. Just click on that select all tab on the bottom there, and you get all the months, all the strikes, all of it comes up, and you can kind of just look and see exactly what was popping off that was maybe a little bit weird, maybe a little bit interesting. And this week, a lot of stuff popping off across the months, but nothing extremely outlandish from a strike perspective. Unless we're looking here, we've got, what is this, SEP 2019, 38 puts, doing about 2,500 this week. So I suppose that qualifies as a little bit outlandish. But outside of some of those, most of a lot of the action on the 70s and some other near-term calls that are fairly straightforward. So not getting a lot of the, shall we say, the esoteric paper that we sometimes see out here. It's like a 60-70 vertical going up in Dees 2020 on Tuesday, 2,000 times. So some interesting action out there. Again, a relatively reasonable, actually in the money strike now with those Dees contracts. So interesting stuff out here. Speaking of interesting, Nick, you tweeted out a chart here before the show. We've since shared it again since then. Listeners, if you're not doing so, follow Nick over there at Quick Strike, QUIKSTRIKE1, no C. And you can get access to all these cool charts too. And you pointed out an interesting nugget. You know, we're always talking about the skew out here in WTI, Nick, and how typically the bias was to the puts from a vol perspective. Sometimes you get a near-term pop. You see a little bit of a near-term bid to the calls popping in, but nothing like what we're seeing right now. Why don't you break down what you shared with the Twitter folks here? How the skew looking a little interesting today.
Yeah. So I guess everybody's a little bit surprised just based on some of the data that came out that we saw such a strong move up in the crude oil. And I think last week we were sort of just were really waiting to see what would happen. We thought we were back in the belly of the range for a period of time, but we seemed to push through that. And as much as we're up 5%, right? As much as we're up, it's not a tremendous amount, but it did do enough to cause vol to get popped quite a bit. So I mean, typically when you look and you see the vol get bid, you want to go take a look and see how the vol curves reacted. And I think from last week to this week, what I plotted and what I sent out, and I did it just pre to the show, and so expected Mark and those guys to retweet it and then give us a chance to talk about it. But it really looks like we're sort of in the belly of the whole range at this point now, because just looking at the June, if you look at the strike curves for May and June, you'll see that they're pretty symmetrical right now. So we were probably up on the put side a little bit prior to last week, but right now we're sort of right in the middle, meaning the at the money and when we talk about the belly, tends to be closer near to the bottom of the volatility for the entire expiration. And we're seeing a pretty flat volatility between the 25 delta strikes. Now there is some premium between the two, depending on what curve you're looking at, and it's not exactly flat, but it is more flat than it's been in a while. So if you take a look at those charts, you're going to see that the May is a little bit flatter. That's got like 24 days. So we're right around our 30-day mark. And then the June's got another 30 on top of that. So it's still a little bit of bias to the put side, but that strike curve, which I did not send out, I just sent out the Delta one, looks more like a, pretty even smile. And the Delta one, we tend to put that out just so you get a little bit better relationship. So because of the way we talk about skew in terms of the 25 Delta put and call, this gives you a really good sort of simple way of looking at it. You don't even really need to see the quick skew numbers to sort of eyeball here and get the idea that things are pretty even there between the 25 deltas. So I thought that was definitely something worth mentioning. The other thing along the open interest lines, which you can't see from the this weekend options report, but we can maybe that's an idea to add that as one of the in-depth links that's available when we open it up during the show. But another piece of quick strike in the open interest tool, and I think you're able to see this on all the different levels, free all the way up. We do have a daily openings, and I went back and checked just to kind of get an idea if there's anything else interesting to talk about. And there were a fair amount of openings in the June 2019 contract on the downside. So today we had openings in the 37.5 and 42.5 puts. The 66 calls, not about 100 of those on the upside, but 1,000 on the 37.5 puts and 500 on the 42.5 calls. And we saw openings on the downside all week in the June contract. So we're seeing 1,500 in the 38 puts, another 500 in the 37 puts. So as much as we saw that push up this week, we saw openings in those lower strikes both today and yesterday. So as the market moved up, we did see people sort of initiating. And again, the openings are when there was no open interest prior to that trading day. So we did see people initiating some trades on some fairly significantly lower strikes. So I thought that was worth pointing out as well. As far as the volatility front in general, I mean, you could see, even if you just the curve shape has stayed, the strike curve shape has generally stayed pretty much the same. We did get a sort of a parallel shift up in volatility. So that's a real true move up in volatility. We saw the skews recover quite a bit. The calls were a little bit cheap in the front three or so, even all the way out to the December contract, getting more cheap as you moved out onto the term structure. But things that were below the at the money are now above the at the money or flat to the at the money in the May and the June. So that's that makes you think that there's some opportunity maybe for some follow through here. We did move into that part of the vol curve, so that'll be worth watching again. Mark, I don't know. I didn't get a chance to ask anybody, and as I watch this move up, I didn't see any news that I thought should warrant to move up, but it will be I would like to know what people think as to why this push happened. Was it like a holiday liquidity issue or something like that? Or are we going to see us fall right back down and have more vol get taken out of it next week? Because, I mean, the curve sort of balanced itself off to a move in either direction at this point on the two front contracts. But I wish that we had a little bit more insight into why we actually saw such a push like this week.
You know, it's funny. I was kind of wondering that myself when I was looking at the data right before the show here, and it seems like because you're right, all the data this week, EIA and others, was like last week, decidedly bearish. So what would cause this to jump? Does seem like, though, OPEC may be renewing and standing behind their production cuts going through 2019. That kind of bit of late-breaking news there is really what kind of swung the pendulum back to the upside here for the latter portion of the week. Because you're right, coming into today, I was expecting crude to be probably off or maybe a little bit unched and not to have this aggressive rally that we're seeing out here. So interesting stuff out here. Yeah, OPEC standing behind. This has kind of been the story from the beginning. You know, the OPEC kind of supply story versus the U.S. domestic production supply. By the way, anecdotally, Nick, I forgot to mention last week, I was down to the FIA conference about a week and a half ago, and I was talking to some folks I used to trade with who are now actually active in the Canadian regulatory space of all things, and they deal a lot with the Alberta oil sands, as you might imagine, up there, which you talk about a lot here on this show. You know, how much does it cost to really produce up there? And we've heard, you know, a lot of, I'm sure you've heard as well, a lot of listeners have these anecdotal numbers, 70, 75, 80 bucks a barrel to dig it out of the sands and filter it and all the other stuff. Extremely costly to produce. And so I kind of put that to them last. Said, you know, how is all this OPEC stuff, how has that really been impacting those guys? Have they really had a chance? We've seen a lot of other increases in efficiency. Have we seen similar increases with the oil sands? And they all pretty much said yes. They actually, all the producers, and maybe another one of the, you can file under the unintended consequences of OPEC's action. They kind of galvanized all the producers up in the oil sands region to really kind of get together and share their knowledge in terms of technology and efficiency. And they kind of created a big fund to produce that and share that information. And according to these guys, and I haven't had a chance to verify this, but they're saying they got it down to around $40 a barrel, if not less. That seems like a pretty dramatic improvement. That would be about half. But even if it's less than that, still, that shows that those oil sands and the things that were traditionally viewed as being, you know, too expensive to operate, maybe even at these levels, $65 a barrel, maybe you're still losing money. It sounds like they're deep in the black now because of all of that. So interesting stuff, Nick. That it sounds like OPEC at the end of the day may have not done themselves any favors with this move at the end of the day.
Yeah. So again, as we always get the benefit of on a Friday, we get to speculate about what happens next week. I mean, we had a pretty good. Let's see how we finished here from where the most of the. I mean, we had a pretty late break, and we saw movement all the way up to the close. So it'll again. For me, it's always on a Friday during the holiday season like this. It's always interesting to see how the market opens on Sunday night, just with the people that were gone and sort of felt like they missed the boat. If they're trying to, get back in the game, and if they keep pushing it higher, or if they, are following up and catching up with news and saying, there's really no reason for this kind of stuff, and they push it lower. But I think given where we are, from a curve standpoint, it looks like it's anybody's guess at this point. So typically we have a little bit more of an opinion on Friday, but I think right now, we'll do a coin flip to see what continues for Monday.
Yeah, it is fascinating to watch out there, all these just endless different permutations and debates and the continued song and dance out there in WTI. We could go on about it probably for the rest of the show. I know some of you would be happy about that, but everyone else who writes in for all the other product categories would not be happy, particularly all you, and we know you're all out there, the hardcore, shall we call you, gold bugs, who've been seeing some action this week. Maybe, I don't know, Nick, maybe this is the week that gold perhaps re-earned its hedge status. It was debatable there for a while. We weren't really getting the not quite inverse, but at least somewhat inverse correlation that gold is supposed to have in these times of stress and trouble. We saw a lot of people hemming and hawing about switching to other things like perhaps crypto for their portfolio diversification. We've all seen how well that has worked out over time. So that kind of lack of performance on the crypto side, and of course gold doing effectively what it's supposed to this week. Maybe combining, of course, a lot of talk about the dollar this week and the big sell-off in the equities, all that propelling gold to lofty new levels here, up about 40 handles, right around the 13.5 level, up about nearly 3%, about 2.75% out here in gold land. So this is the pop I know a lot of you gold bugs have kind of been waiting for, these kind of anemic 5-handle, nothing moves you've been seeing of late, and not quite doing it for you this week. Hopefully putting some smile back on the gold bug faces. Overall OI growing about 4.5%, so pretty strong month or week, I should say, out here in all things shiny stuff. In terms of the action, about a little more than a third of it coming in that April contract, which is going the way of the dodo. It's only got about 3 days left, so it's pretty much a weekly at this point here. But that is where we saw the lion's share of the action. That's also where we saw our number one with the bullet contract out here again. You might say, hey, the underlying rally and 40 handles on the week hitting that 13.5 level. You might see some of those calls dominating it. And spoiler alert, you do. But they're not on the top of the list. Number one on the list, number one with the bullet, is actually the 1,300 puts, doing about 11,600 contracts. The lion's share coming on Tuesday, about 3,500 of that. Actually, I'm sorry, Monday, 5,200 on Monday, 3,500 on Tuesday. The rest kind of scattered throughout the week. Net slightly closing, about 200, 300 contracts closing here on the week on the 1,300 puts. So kind of interesting. We were of course, flirting with that level right around the Monday time frame when those puts were active, so maybe not quite surprising there. Now as we rally away from it, the 1300s distant in the rear view mirror, instead number two on our list. 1340 calls, and now pretty much in the money. 1340 is doing about 10,300 contracts for the number two spot on our list, about 3,000 on Tuesday, 2,600 on Wednesday, and 2,800 today. Kind of the Goldilocks coming in here today at 28.5 on the contracts. About 1,700 net opening on the week here. And right behind it, only about 50 contracts less than 13 halves, which is where you probably would expect a lot of the action to come. They actually came at number three on our list this week, with the lion's share of that action actually coming today. 10,300 of that 7,300 going up today. The rest 2,000 on Tuesday. The rest kind of scattered throughout the week. So again, we saw the 1,300 puts active on Monday when we were down around that strike range. Now that we're threatening the 13.5 level, today we're seeing those contracts much more active. We see maybe that might even continue as the day goes on. We might see that number actually overtake it. It's number two. We'll see if we get a few more contracts filtering in there. Again, about net off about 500. Obviously, we don't see the OI nut change for today's activity, so that could make a big change in that. But still, a lot of action going up here across the board. Then we actually have to roll out a little bit, which is always fun to do. Back out to the June contract and a little bit south of the 1,300 handle for number four contract on our top five here. The 1,280 puts out here in June doing 7,000 contracts. The lion's share today, 3,500 of those going up today, 3,200 going up on Tuesday. Actually, that was all opening. It was about almost 3,200 contracts opening there. So that was pretty much the lion's share of the activity on the week. Opening on Tuesday, maybe they're closing it out today. We'll have to wait and see if that was a very short-lived trade out there in the old 1,280 puts. And then rounding out our top five here for all things action-packed here in the shiny stuff, we've got kind of a mid-level strike, a 1,330 calls, 6,700 of these going up this week. The lion's share on Wednesday, 2,600 going up that day. The rest sporadically throughout the week, off about 700 net closing on the week here. So a lot of action kind of throughout the shiny stuff here. Just doing a lot of our scans, as we like to do really quickly here, listeners, to see what was really lighting it up out here in terms of funky stuff. We saw some SEP 1520s, 1,600 of them going up on Tuesday, actually slightly closing on that, which is kind of interesting. Also, if today's move is not quite bullish enough for you, and you said, by June of next year, I really think we're going to be at that 2,000 strike. Yes, 2,000. Then you're not alone. Someone putting on 6,750 of the June 2019 2,000 calls. Yes, June 2019, 2,000 calls going up 6,750 times. Obviously, that's today, so we don't know OI change. But still, a lot of paper. Also worth noting, the 1800s also doing about 2,350 today. So maybe there's a bit of a ratio going up there. The 1800s actually active throughout the week out there in June of 2019. So if you think you're a gold bull, someone out there has got you beat to the tune of nearly 7,000 of these 2,000 calls in June of 2019. Just scanning really quick, and the other funky strikes. The 1210 puts out there in August doing about 1,000 contracts this week as well. So some weird strikes out here. Mr. Nick, what do you think of these 2,000 calls in June 2019? And then what else is catching your eye out here? Gold's always, at least it has been, not so much lately, but it was a fun one to watch from a skew perspective. Any interesting nuggets? I'm guessing those calls going to be a little bit bit this week.
Yeah, so I looked out in the blocks, and it doesn't look like any blocks took place in either of those high-end strikes. And I was hoping you would mention those because those were on my list of things to chat about. So, and the math is not exactly so 2,350.
Yeah, the
that's
ratio doesn't work.
4,700. Yeah, the ratio doesn't work all that well, but you get 4,700. You get like 6,050, 7,050. So maybe it's some sort of 1/3 type of thing, or maybe there's 2,000 by 6,000, and the other 350 and 750 are people who just try to scalp out of something. But those weren't on the block, so those traded on the wire on Globex. So yeah, those are definitely ones to pay attention to. I did recall seeing there was news about Russia continuing to stockpile gold, and that news has been going on since much of last year, how they've been increasing their stockpile. But there was a renewed article on the 19th about them continuing to put it aside. And then there were some analysts out there who felt like some of the trade has been keeping the real price of gold down quite a bit. So there are predictions for another 400-point rally on this thing, still up to that article came out when it was around 1,300. They were thinking it could be 1,800. So maybe we are finally here at this point where we're going to start continuing to see a little bit of a push up. But until we've been on this part of the range before, so it's not like it's new territory for us. In fact, I'll go back and look at this. We touched up about 1368 back in late January, and then if I look. I don't want to look at that one. If I go back and look a full year out, we were 1368 was our high. We got, we got to 1360 before. So we are still sort of in our rangy, kind of almost the high end of our range here. So we'll see how it continues to go. And I didn't look at the vol curves here, the skew yet. We definitely got, short, not too much of a change long term in regard to the calls to the put. So still sort of, which makes me feel like that curve has just sort of shifted along with the future. We have obviously a little bit of increase, but like it's sliding up along with the future. Not too much of a shape change, but more of just a little bit of a bid in the vol. And I'm going to take a look at that too, just to sort of verify what those two contracts look like. I'm going to take this guy off because there's not much left there, and look at the May and the June. And I think, let's see what this looked like last week. We got the comparison on there. Yeah, I mean, here's the part you were talking about, the tape, seeing the live tape versus the raw. Here, you get a lot of pauses here in the raw one. There's not much change in the shape of the curve from last week to this week. We see more of the call kind of sliding up the vol curve. So, the bid is really not coming from much other than us tracking the volatility curve. So not a big bump up, just more of a movement up towards where things were bid on the vol curve already. So, nothing really fantastic to report there. The difference, what you're going to see with that is a little bit of a bump in the calls in regard to the quick skew numbers. So a little bit richer than they were, but and the put's a little bit cheaper. But we've been in the doldrums still, even with the 2-point move up, we're still only at 11 vol in the May contract. So, all in all, pretty good move from a pure number standpoint, but reality is not much change in shape and not much shift up in volatility. So more of a move along that. So outside of those 2,000 calls, which will be interesting to see, you'll be able to see those open interest numbers should get updated about 11 o'clock tonight. So you can go out there and take a look if you're up, or you can take a look tomorrow morning to see how those are from an opening standpoint. And I would look at that 1,800 strike as well to see if there's some sort of ratio spread that went on there as well.
Yeah, it does seem odd that those two near-term strikes, the numbers are off, but it does seem odd that they would not be somehow related. Just they are so close, and such weird strike choices so far out that it does seem like they probably are somehow related at the end of the day. Weird stuff. Speaking of action people have been watching this week, Mr. Nick, we can't gloss over the indices this week. That's been where a lot of people's attention has been glued, focused. We've been seeing the president renewing his vitriol on the trade war side. That's been spooking the markets. We also saw a lot of the big tech names getting shellacked, I think is the technical term. So all of that combining for a nice little 1-2 punch to the market. Also saw the Fed coming in, but that seems like spitting into a hurricane at this point in terms of the Fed doing their little dance as well. But all of that combining for, shall we say, not the best week on the market front with the S&P. The E-mini out there off, nearly 5% from this point about a week ago. So, not so much for the bulls out here this week in terms of what we saw out here in action. Again, the S&P E-mini, pretty active contract on a given week. This week, OI up 18.3%. So people are playing in the E-mini this week. Go figure how that one works out. I'll let you look really quick at the skew in a minute there, Mr. Nick. I know people are probably asking about that. We looked before when we had these kind of big moves, and we haven't seen as much tumult in the skew as perhaps people might expect. Maybe this week might be a little bit of a change of pace. In terms of change of pace, it actually was interesting to me as when we're looking out here, breaking down, again, listeners, you guys can do all this yourselves, cmegroup.com/TWIFO while you're listening to the show, or anytime during the week, head on over to bantix.com. It's BANTIX.com. Click on the sign up for Quick Strike link there, and you can play along to your heart's content with all of these reports and a lot more, including if you did that, you could see out here right now. Spoiler alert, by the way, vol up obviously this week out here in the indices. That's kind of a bit of a no-brainer. One of the few more reliable relationships you can count on out there in the space is aggressive sell-off. Vol is going to be up in the indices. So that one at least hasn't lost its teeth as of yet. But what we saw out here, kind of interesting. A lot of action, a lot of strikes, a lot of months active, including when you're looking at S&P E-minis. You got to look at the weeklies, even the end of months lighting it up. I kind of commented on that with Derek down at the FIA show we did with Blue a few weeks ago, that the end of months are surprisingly active out here in this kind of contract, which is not something you see in a lot of other index contracts. But that said, you might think all those things would be lighting it up, but actually no. And it might be some kind of front month at the money type trade. Those were certainly active in the weeklies, but it was actually the June 1475 puts that really were dominating the action out here in the E-mini this week. To put that in context, listeners, we're settling out here right around 2630 as we're doing the show here. So yes, 1475 puts. Shall we say a few points away from where things are lining up right now on the old trade. And what we saw out here, it may not surprise you to see some big numbers going up out here. It may surprise you on the strike, but not surprise you to see that it probably was, and indeed it was. Closing about 20,000 going up on Tuesday and about 16,000 going up on Wednesday. Total of 47,000 of these puts lighting it up here on this week. And again, pretty much most of that closing. So someone out here giving up the ghost on the 1475 strike out here in the S&P, and doing so for size. So if you thought you were a bear, you thought you had some downside looks, this guy out here clearly had some as well. Looks like the 1375s also went up as well. They went up about half the size, 22,000, also on the same days. So maybe a bit of a ratio going up there. They traded 8,100 on Tuesday and 13,000 on Wednesday. So maybe someone had a bit of a put spread there, or perhaps a ratio on their Either way, then it'd be 2 by 1 if that was the ratio, which would be kind of weird. But we've seen weirder things. So either way, the 1375 and 1475 puts out here in June, just lighting it up across the board out here, which is kind of fascinating. We also saw, I was looking at some other kind of esoteric strikes because all the front month stuff was lighting it up, as you might assume. The 26 half puts in the week 4 contract doing a ton of paper, 32,000 contracts out there. It was active, 2,600 puts also doing well out there in the weeklies. So yeah, a lot of action on those. Just looking for some of the more bizarre stuff. 2875 calls in the week 2 out there in April. They were doing about 11,500 contracts this week. All of that on Monday, actually. And a good chunk of that, about half of that closing. So a lot of funky, bizarre strikes, a lot of it closing this week. Maybe people deciding that discretion is the better part of valor here, taking what they got left and getting the heck out of Dodge as these markets are getting, shall we say, a little bit topsy-turvy, Mr. Nick. We haven't spent too much time on this, but I know our listeners like to delve into S&P skew. We touched on vol views a little while ago. What are you seeing out there, though, specifically when it comes to quick skew out there in the E-mini? Anything catching your eye this week of note?
Let's see. I gotta get rid of some of the shorter dated stuff because that's not quite as interesting. So those, we're making some definite shifts. Go back out to, there we go. We got, look at our 21. Let's look at our 28-day option. So, well, does it surprise? No, again, I think what we're looking at here is we had such a significant break in the contract that, you know, based on the way the curve is shaped, as much as we saw vol pop, I think we just again see we're seeing vol move along the curve, right? So if we go take a look and see what the vol curve looks like, we'll look at the June contract and compare it to where we started last week and where the future is now. I mean, yeah, most of this volatility move is just sort of kind of taking that the bunny tow rope back up the mountain here, back up the volatility mountain. So I don't think it was really too much of an increase other than the fact that we just sort of moved. The shape of the curve changed not at all. We just sort of moved up the, or, you know, down the futures, up the vol curve. So again, I mean, to me, that's probably been the thing I've tried to pay attention to most over the last month or so, is just looking to see if that volatility is really meaning anything significant other than the fact we're just sort of playing around. And I think that term is called, one of my friends at the CME has been educating me more with this, Carrick over there. I think that's called really the local volatility, and it's a little bit different calculation than the regular volatility, and it's just kind of moving around the vol curve as opposed to having volatility move or shift the curve. So I think we're seeing a lot of like movement along the curve and not so much of a change, and that's going to affect significantly how our quick skew numbers look. And to go back to your original question, you know, you saw the calls get cheaper and the puts get more expensive, and that makes total sense. If you're looking at a vol curve that basically looks like a slice from the top left down to the bottom right, and you move back up the slide, you're going to see calls get cheaper, and you're going to see puts get a little bit more expensive. So from a pure volatility standpoint, and a change in percent difference from the at. So nothing crazy from that perspective. I think nothing out of the ordinary that we're seeing here. I mean, those when I first saw those puts, it would be really interesting if those were openings, but those are not openings, they're closing. So you could probably think somebody was puking if they got a little bit spooked with some shorts they had on to make some money, because it's out there far enough, 90 days, that they probably had some premium to them when maybe they sold them with the last break and got a little juice out of them, but then they're covering this juice before they, got scared too much with this break early this week.
Yeah, those puts came on my radar right away, too, and I was like, oh, that's fascinating. Then you start digging in a little bit, and you say, oh, yeah, you're right. It's someone getting the heck out of Dodge there. Still, the strike selection, interesting in and of itself. Speaking of interesting, what was lighting it up, what was moving and shaking over there on the CME complex this week? A lot of products are moving. We hit on a lot of them. Number one to the upside, big movers, was actually heating oil up 5%. Number two, hot on its heels, we just spent a lot of time on WTI, up about nearly 5%. Actually, as I mentioned, This chart is a few minutes old, is actually up over 5% now, so it might actually be number one this week. The old RBOB, number 3, about 4.15%. Number 4, gold, also spent a lot of time on that, up about 3.25%. Number 5, round out the top 5, is the euro dollars, with up nearly just a little bit shy of 2%. On the downside, we see Oats taking it on the chin, off about 6.8%. Not a good week for Oats, or a good week for Oats, or for wheat. KC wheat off about 5.8%. Same amount there actually for the NASDAQ E-mini, off about 5.8% on the week. 2, number 4, we got our old friend Lean Hogs, off about 5.25. Number 5 on the downside there is good old Nikkei yen, off about 4.8%. Now it's time, listeners. We got to make some time for you folks, so they're coming up against it here. So let's keep on rolling right on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the Futures Options Feedback, where you guys tell us what's on your brain, and you guys have a lot of fun stuff on the brain, which is why I always like turning it over to you guys. Let's see, people always ask every week for different product categories. Doesn't fail, we get it again this week. What do you guys want to see? We got Anders wants to know, he says, can we get some ags on the TWIFO show this week? Well, like I mentioned, in the movers and shakers, the ags are actually moving quite a bit. We saw KC wheat off. That doesn't really trade a ton from an options perspective. So let's pull up our old friend, maybe wheat instead. Straight up wheat, and pull up that one that does a little bit more paper out there, maybe, so we can maybe sink our teeth into that really quick. That's off about pretty aggressively, off about 10 handles this week as well. It's not a great week for wheat across the board. Vol up, as you might imagine, as a result, up substantially out here in good old wheat here. And what was lighting it up here, number one, I said, is right around the 460 handle, is where wheat settling out the week. Number one with a bullet by a substantial amount out here is actually, looks like a weekly. I guess they have a pretty active weekly contract out here. It's the looks like a May. Actually, no, this is a May contract here. This is May. The May 4.5 put doing about 9,300 contracts this week, of which pretty evenly throughout the week. 2,000 and change on Tuesday, 1,800, almost 1,900 on Thursday, 1,500 on Wednesday, actually 3,000 on Monday. So a pretty active week here for the 4.5 puts. Again, nice even strike. Not surprising that would be where a lot of the action kind of rests. Number 2, the 430 put, actually getting out there a little bit. 6,200 contracts, the lion's share actually today. About 2,200 going up today. By the way, those other puts, 4.5 puts, pretty much even from an opening perspective, a little slightly opening. The 430 puts opening about 1,300 contracts. So some opening paper net on the 430 put strike out here in we also saw the 480 calls pretty active again, all the same month, doing about 58, nearly 5,900 contracts. The lion's share, actually coming up Tuesday, 2,200 contracts, 1,800 going up on Monday. Net on the week also slightly closing, but kind of a lot of back and forth. So we're seeing a lot of back and forth action out here in the wheat. Net OI up about 2.5% this week, so slightly increase out here. Some weird paper got the 700 calls going up out here in Dees, 700 calls, doing about 1,500 contracts, about 1,000 on Monday. Again, I'm not a week guy, so this stuff tends to trade on on his planting and harvest schedule here. So that's why you might see Dees a little active. 700, that seems like an interesting strike to me. Just really quick, Mr. Nick, I want to give our ag lovers out here a little bit of love. Wheat seems to be moving these days. Any thoughts on wheat, or maybe some other ag is catching your eye out there today? I have to see who asked us this week. Oh, it was Anders asking us this week about ags.
I think a lot of the stuff we can start paying attention with the ags is the effect that the tariffs might have on any of the exports or imports that we send or receive. So I don't have any great insight this week, only because I didn't watch or pay attention too much. I didn't hear too much. I know that I'm on a couple broker lists for activity in the corn pit, and stuff trades. There's a fair amount of trade, and there's a lot of different houses that participate. So I think it's just that where we tend to gravitate towards the products that have a little bit more OI and a little bit more overall daily volume. But when all things are said and done, there's a fair amount going on in the corn and the wheat and in the beans. And I'm sure those guys that are in the pit would say, well, of course there is. Why would we be down here otherwise? But don't see anything. We had that good run back when we first started, when the beans were, when there was some crazy quick skew numbers with the beans. We don't see much change here in the wheat in terms of what the shape of the curve looks like. We had some movement, but the quick skew numbers didn't shift all that much. So the relationship between those the 25 deltas is pretty much exactly the same as it was last week. And then going out and looking at the beans, might as well throw in the beans while we're out there, because we do tend to pay attention. There was a pretty good 22-cent move on that this week. They opened up. They got some opening activity in some at the money calls in the weeklies, so that's always a good sign. But probably more significant out there is we actually saw the whole. This is we saw the puts get bid quite a bit here in the beans, and we saw the calls get offered. So in the ags, we saw a move in the wheat, but not much change in the vol skew. In the beans, we see a pretty decent move down as well, with the calls getting bid and the puts the calls getting offered and the puts getting bid in the process. So some shifted from being below the puts at the money to above the at the money, and some shifted being from way below the at the money to being nearer to the money. So and again, I think I'm learning this too as we go along. The skew, when we talk about it, we're going to always tend to be 60 days in, because when you start to go outside of that, you're going to see the curves are kind of very, very, they're more stable than they are short term, and a lot of that has to do with the less days to expiration. So your curve's going to change, and it's going to get squeezed as you move towards. But this 30 to 60 days is a pretty consistent place to look. So we did see some change in some of these ags with this move down.
Yeah, the ags have been kind of settling on our movers and shakers to the downside a lot of late, so they are lighting it up. So it's not surprised people are hitting us up with some questions about that. We'll keep an eye. Like I said, the volume nowhere near what we're talking about with the E-minis or WTI or even gold to a degree, but it's still it's interesting stuff, and a lot of people like to play, at least watch them. So we'll keep them on our radar. I ran into your buddy John Nelson the other day, Nick, and he was talking all about the beans, what's going on with the beans. He's very much a beans man, so there definitely is a contingency out there that loves talking ags. All right, we got let's see, Accutic sending in something to us here. They sent us a chart on the 10-year T-note, saying there was some interesting earlier this week. They saw some interesting screen buying of the May 119.5, 118.5 put 2x3 in the morning, about 9,000 by 13,500 at interesting levels. They said, so according to that trade, a move to the rates around the 3.06 area would be ideal. Above that, it would start to hurt. They wanted to share that with our audience. So yeah, the rates get a lot of play as well. It's interesting, especially this week, obviously, a time a lot of people are focusing on rates. We always have to pick our poison here on the show. We only have an hour. We could probably do a dozen different products if we really wanted to. But interesting stuff. Thanks for sharing that with us. We'll keep an eye on that ratio out there in the 10-year. We always like our funky ratios out here. They're always good for a few nuggets here. Neil Brennan wants to know, Nick, you have at the money implieds for crypto. Can you also interpolate the skews? We talked about this before a little bit. You guys are pulling out some implied. You talk about how it was around 106 recently. I think the average is around 94 for at the money out there in Bitcoin. Are you guys starting to drive some skews yet, sir?
Oh yeah, I think I mentioned we do, and I say it all the time. Or at least the last 3 weeks since we did release it, we are tracking the historical. Right, we have the historical actual volatility, and then we also have an implied skew calculation. So based on net changes, daily rates of returns, we build a distribution and then create a vol implied skew. So we do have that. So right now if we look at daily returns, we have 3 ways that we do this. We have daily returns, which we do, 1 year's worth. Then we have 60-minute changes. All right. So it's like we do the calculation the same as we would do dailies, but we look at the change over a 60-minute time frame. And then we have 15-minute changes. And we try to look at the number of buckets or number of, the number of plots we use to create the distribution. We try to make them generally equal among those 3 different sections. And whether the 60 and the 15-minute are relevant, we did that with the intent of trying to get a better handle on what the shorter term volatility might imply to from a skew standpoint. So if we look at the annual daily change stuff, we have at the money around 89%. And, and we don't have deltas on these per se, but we do have a daily rate of return. So like a 10% change in the underlying on the upside is probably around 97 or 98, so about 10 vol difference, and a 10% change on the downside is probably about a 12 vol distance. So the curve, it looks pretty distributed in terms of the movement around the money for the longer dated one. So the long answer to a short question is yes, we do have implied skews. You can reach out to me directly, and I can tell you how to get access to that stuff. It is available through another service, and you're more than welcome to take a look at that. And then if we go and look at sort of the shorter dated versions, that's what's really been interesting to me as we've looked at this stuff. The early on when we were plotting this, the volatilities for the shorter dated minute change ranges were much higher because we had a lot more movement in these short time frames, and just wackiness in the movement underlying day in and day out. And now we've kind of studied out. I think that you could probably confidently say, or at least from the numbers that we're calculating, is that the money vols around between 85 and 90%. So I would love to get some feedback from other people to see what they think or what other people's calculations are saying. If anybody's doing anything like that, I can go take a look out here on, if I go look at let me see, where's the at the money here? So let me see what they got here. There's one other exchange out here that's doing this. It's called, I'm on Deribit. And they have the at the money between their call bid is between 96 and 105, and their put bids between 95 and 104. So, and that is on a 7-day. So let's do a shorter dated option. That book's closed. So yeah, so we're right around there, and I think that's good when we start to see some consistency across the different calculation methods, and we're getting a sort of a similar at the money number. It makes me feel like we're doing something right there.
There you go, listeners. You guys want your crypto data, and Nick's one of the few actually, and his team are one of the few actually out there who actually have it. So nice to have some hard data on all things crypto for a change, as opposed to speculating wildly. All right, unfortunately, that music means we've come to the end of another epic journey. You didn't even get to all the questions. We got so many people asking us all kinds of good stuff Don't worry, we'll get to more. You guys keep those questions coming. You guys want more products, we squeeze in more products, leave less time for questions, and you ask more questions. It's a vicious circle, but we love it all. Keep it coming. If you don't get to answer your questions here, we'll answer them on some other show. We read them all. We try to answer them all. We do actually answer them all, even if we don't answer them all on the show proper. So keep those questions coming. We do love to hear from you guys. But before we go, let me go back on the horn. By the way, Mr. Nick, we didn't get a chance to mention, but it's always worth bringing up here. Again, you talked about it last couple of weeks here on the show. You guys are putting some pretty interesting work in over there on the old strategy simulator. Some pretty cool stuff. You know, we've said many times, in fact, when I had our guest in here in the studio earlier this week, he and I were joking about how it seems like the futures options tech used to be about, say, conservatively 5 years behind the rest of the space, the equity index stuff, in terms of bleeding edge tech. That gap is closing quite a bit. With some cool new stuff, including this strategy simulator you're building over there with the folks over there at CME Group. Why don't you break it down again for our audience and tell them what the heck they can do with this thing?
Yeah, so the latest tool that we built, and it's really sort of a derivation of our more advanced spread builder within QuickStrike. This one is just meant to give people access to the benchmark products, and you can build single month strategy. So no calendar spreads in this free strategy simulator that's out there. But what's nice is make it really easy for you to build the spreads and then sort of run a future scenario on that spread to see how it would react if futures go up or down or stay steady, and you can see what your P&L looks like over the time frame from now until expiration. And then the other real nice part about that is that, you know, with that, whatever contract you happen to choose, you can have as many different flavors of a trade within that particular contract. So if you wanted to look at like a long put spread versus a short call spread and how it reacted, you can plot those against each other. So the simulator lets you obviously simulate how a trade looks, and then also compare how multiple trades with maybe a little different take on what your return's going to be, and you can compare them against each other and see what it looks like. So it's a fun one, and I think you can, and it lets you even do physical comparison, or let you do physicals too if you're in the ag market, so you can see how a hedge might price up or help or hurt your physical price. And then some other good stuff coming out soon, pretty soon to be released, is a block trade alert tool. So you'll be able to register for block trade alerts. So you'll be able to get emails across all the different asset classes. You can set your own parameters. A great new expiration calendar is coming out very soon as well. So just stay tuned and, take a look and make sure you get out there and follow along, because the new tools are put on at cmegroup.com/QuickStrike, and you could also tweet us and we'll point you in the direction to our subscription base so you get a little bit more detail with some of the tools.
There you go. Head on over to cmegroup.com /bantix.com, BANTIX.com is a great place to go to sign up for all that stuff. The strategy simulator, if you haven't checked it out, check out our link. We just put it out on Twitter, so you can follow us there, and you get that link there. Just search for CME Strategy Simulator. You should be able to get that landing page. You can check it out for yourself. It's pretty cool stuff and fairly unique in the world of futures and futures options. I haven't seen much else like it. So if you want to start playing around, doing a little bit more advanced stuff, and just start learning how all these options strategies actually break down and work out in your portfolio, maybe without committing some capital first, that's a great way to do it and save yourself some money. So check it out over there, the Strategy Simulator. Grab the link. We'll put it in our show notes as well for you. And on behalf of Mr. Nick and our friends over there at CME and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing, for demanding ever more products on the show. We try to keep up with your demands, as well as sending in such great questions. Keep them coming. And we'll see you next week for more. Actually, we won't. Before I said that, we won't, because we'll be off for Good Friday next week. So we'll see what we can do. Maybe we'll rope Nick in some other shows throughout the week. So you get your Nick fix. Just maybe not on TWIFO next week, but otherwise we'll see you back here in 2 weeks for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered. With market data reports ranging from open interest to the term structure of volatility, Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.